So, or if you can see, if you can look at this, um, I need to limit some people. Okay. If you have seen the entry model you have here, so the attention you have to pay attention is to, of course, we didn't add more ways of marking liquidities on the 5 minutes. Those who are attending a backtesting session, we have seen that. So here you have a what? You have your key level around here. You know you are bullish here. You know you are bullish on the weekly. Weekly has shown signs that you are going to be, meaning you are bearish. You have seen signs that you are going to be bearish. Now, when a new day starts, you just have to count candles. This is uh, this is a 5 p.m. This is 5 p.m. candle. This is a 9 p.m. candle. This is a 1 a.m. candle. This is my trading candle. For example, because I'm bearish, I will mark the high around here. If this candle closes without giving me a 15-minute order block, I have to wait another candle. For example, let me show you the process. I will delete everything and I will keep this line here as the open price. So this is, I know I'm bearish. This can act as a key level. Okay. Or even this one can act as key level. However, I was seeing it as a what? As a doji. So this is 717 candle. That means a 5 p.m. candle. As you can see on the bottom, you can see the hour. We have a 17. This is 9 p.m. or 21, 9 p.m. Okay, we are in the Asian session. Then this is 1 a.m. candle. This 1 a.m. candle is my trading candle because this 1 a.m. candle is the London candle. It is the London session candle. So what I do, if we start from this candle and we put vertical line here to separate candles so that we know which candle we are trading. This is 1 a.m. This is 5 a.m. This is 9 a.m. If I don't see trade on 9 a.m., it's over. It's over, right? Then 9 a.m., you have to mark, for example, assuming that you didn't mark any liquidity, you are just trading blindly. So you mark this area, you mark the high of this candle. You mark the high of this candle. Then you go to 15 minutes. I forgot to put a vertical line here. I go to 15 minute time frame right here. If I go to 15-minute time frame, you can clearly see that this candle closed here. The new candle start. This bearish candle is the start of the new candle, right? This candle closed without giving me what? Without giving me any reaction. Okay, for example, I see a good reaction here. Thank you very much. That's what I want. So, assume that you didn't mark liquidity. You're going to trade blindly. Of course, those who understand liquidities, you know this what? This is your medium liquidity. Okay, we have minor liquidity and medium liquidity. Okay, this is your medium liquidity. You already know that. Assuming that you didn't mark liquidity. Now, here, this 9 a.m. candle, you can see during the London session, from here, it went higher and purged this area and gave you entry model, which is this area. Gave you entry model around here because you've got what? 15-minute engulfing candle. So you must enter on this area. Okay. You must enter like this and target the move to the downside. So this is the loss you have to accept. In case you didn't mark what? All of these liquidities. Liquidity is the key. Okay. Liquidity is the key. Then, if you mark the liquidity, you will have no problem. Okay. You will wait. Assume you didn't mark it. So you can take a losing trade here. Okay. And this is what you have to train your eyes. You say, okay, I have entry model was clear. I lost this trade because I didn't mark liquidity. Okay. Now, this candle closed as bullish, a very clear bullish candle. When a new one starts, once it closes as a bullish candle, again, you have to mark the high of it because you want to see it being purged. Okay. If you can see this bullish candle also, I mean, this candle also closed without purging the high. Okay. After seeing that, it didn't purge the high and it is even below this area. So we still keep the line. If you go to 4 hour, you'll see that because it looks like it closed as a doji. It closed as a doji. You can see it yourself. It didn't purge anything. So the next one, which is 9 a.m. candle, you go back to 15-minute time frame. You go to 15-minute time frame. You go to 15-minute time frame. Then liquidity was what? It was purged around here. Now, after purging liquidity, then you have got what? You have got a very clear other block. So where is the other block? If you look at all of these bullish candles, this one, this bullish candle you have here, this bullish candle you have here. All of these bullish candles were engulfed. Remember, look, this bearish candle did not engulf anything. This one. But the second one, trade lower with a strong momentum. Look at where it closed. It closed after engulfing this area. All of these three candles, were engulfed by one single candle. So your other block is here. This is your other block. This is what I've been trying to tell you before. This is going to be your other block. So if you wait for market to come back to test this area, you see, it will not make any entry. Okay. The other block is here because the candle went down in a single move. It was one candle that closed. If this candle trade lower and even closed, for example, around here as a single candle like this, your other block would be around here. Okay, because it would have to have taken what? All of those candles in a single move. Okay. Now, here, as you can see, price went down. One single candle, 15-minute candle went down with strong momentum and closed around here, engulfing these three candles. So this is your other block. The last candle that was engulfed is where your order block is start. So your entry would have been around this area with 15 minute pips of stop loss. If you want to hold for a whole week because you know you are bearish, you can keep holding. Okay, can keep holding if you know the whole direction of your weekly candle. You can keep holding until you take the target liquidity, which is around here. Okay, if you trade the weekly candle, you can keep holding. Okay, it depends on your mindset. Not everyone is capable of holding a trade for a week or a day. It depends on one's it's depending on one's uh, psychology. Your psychology determines the trader you are. Okay. So if you look at the next candle, of course, the Friday was what? Was bullish, was reversing as usual. And then on Monday, you see a negation that was forming. So on Monday, if you look at Monday setup, let's look at these three candles of the new week. Then on the 4 hour, you have what? On the 4 hour, you still have what? You still have this week. Remember, week can also be what? Also be a key level. If it is a part of another block, for example, like this. This is your another block. On the 4 hour, this is your key level. So the whole zone here is your key level. This is your key level. Okay, the whole zone is your key level. So market is coming back. On Monday, again, when Monday start, you start counting candles. Okay, you start counting candles. Then this is your 17 a.m. candle. And it's not tradable. This is your 9 p.m. candle. It's not tradable because it doesn't match London or New York. Then this one is New York candle. I mean the London session candle. So what you do, you mark this. As you can see, market is inside this candle. Market was running inside this candle. So we need everything is inside. We need a patch around here to make it the high of the day. Okay. If you go to 15-minute time frame, see what we have. After this candle, look at the candle that first of all purged the high. It's this one with a strong wick. Strong wick can be a liquidity. Okay, can be filled or taken. So it was purged. It purged around here, and it was even during London session. Okay, it was during the London session. Then there is no engulfing candle that was formed after purge. After purging, there is no engulfing candle, right? So there is no entry model. So new candle start, another one comes, another purge again. Look at it. Another purge. Probably feeling this area free. The strong area market was testing in this area. Now, after that, you have to be patient and wait. Waiting is the key. So after this, we have got what? We have got another candle trading lower, creating engulfing candle on a 15-minute time frame. If you look at here, from this page, you see there is no bearish engulfing. There is no one. So you have to wait. For example, when this candle was trading lower, you would have seen engulfing and you have taken a loss because you didn't wait for market to close. Always wait for a candle to close to confirm that you've got what? You've got engulfing candle. So after that, you can see it engulfed this bullish candle. Even it didn't only engulf the open, it also engulfed the what? The low, as you can see. Closed below the low. So your order block is from the low around here. So where is your retest? Right here. You can see this candle that came back to test this one. This one that came back to touch this area is your entry. You have to enter on that test. Okay. Do not wait for this because you don't know that is going to happen. Because the market may easily drop heavily. So once this candle is touching this area, this is your entry model. Make sure you are shorting around here. Stop loss above 11 pips. That's your 11 pips. Okay. If you are holding for a week, this is gonna be your entry for the whole week. Okay, it's gonna be your entry for the whole week. If if you are if you are if you are if you are a day trader, of course you will exit before they close. So you will look for what? You will look for the closest liquidity, which can be, for example, this area, or this. You can target 1, 2, 3 around that most of the time. 1, 2, 3 is enough. Okay, if you are doing trading. Okay, now if you go back to daily, go back to daily, we still have another candle here. This one. Okay. This one and this one. I have two candles. Again, this one on Tuesday. You can see market opened and traded and started trending. So on Tuesday, there was no setup. There was no setup on a Tuesday, as you can see. Market opened here and traded, and it was a very trending. So there was no setup. You have to avoid. Okay, you have to avoid that. Then here, where is the key level around here? So the key level around here, there is something, I don't know if I told you about that, but I think I told you about it. What we call traded rebalanced. The traded rebalanced is when, for example, you have a bearish candle like this. This is a bearish candle. It traded lower, come back to trade higher. Then when another candle start, I try to refill this zone. For example, sometimes you see this setup looks like this, or a little bit lower. So it's gonna be this zone for the whole week is what we call a traded rebalanced zone. It's a very strong key level, and you have to understand that it's a very strong key level. So the same here. It's a very strong key level. You have to understand the traded rebalanced. So here, you do not have to wait for market to come back here. If you see this, understand that market is likely to test that and continue to go down. So back to entry model, you have what? You have this candle, 17 a.m. You have this candle, 21 a.m. They are all ranging, as you can see. Then you have what? You have tradable candle, which is 1 a.m. So you have to position yourself to sell this candle. You don't know if this is going to manipulate. Okay. Your first target is to sell this candle. This one once it touches this area. This one, I'm not talking about this bearish candle because you don't know if this is going to happen. You do what? You focus on this one. So we're going to put vertical lines there so that we can see what each candle was doing. See what each candle was doing. Now, if we switch to 15-minute time frame, if we switch to 15-minute time frame, you can see the case is the same as the one you have seen here. The same. You can see 1 a.m. candle opened the patch the liquidity, okay? Then traded higher. Then after another one, this one opened, then it purged and it create what? As you can see here, there is no clear valid order block. This type of consolidation, okay? You have to pay attention. So you have to see a clear what? A clear move, okay? Now, this one engulfed these two candles. So this is gonna be your order block, and your entry is here. Your entry is not here. Your entry is here on this candle because you don't know if this is going to happen. Okay, what you do, you short the market around here. Big wick, liquidity is filled, patched again. Entry around it. So your entry is like this. Stop loss above. You don't know if this is going to happen. So this is what I'm telling you. Once you enter on this test, look, once you enter on this test, look, I didn't mark this area. I marked this candle because this candle engulfed these two candles. So the last one that was engulfed marks the beginning of my other block. So during this test around here, this is your entry level. Be enter around here and keep your stop loss. Because if you do something like this, you break even, you can see you are taken out. Okay. Keep your stop loss open because market may like it to come back to test again. So you have to have something like this. Better if you make entry like this, better you go away from your screen. Because if you see this, you may start reacting. Cross the screen, because if you have to take one trade per day, that's what I always recommend. Take one trade per day. If you lose, you lose. If you in, you in. Make entry, put your stop loss, leave your screen, and come back like after like after 4 hours, for example, to check what's going on. Okay, what's going on. So this is another good trade. Okay, if we see with this style, if you see 2 or 3 trades a week, those are enough. Mostly 2. If you get 2, that's enough. If you get 2, that's enough. The trade you truly understand, because you may say, okay, I wake up the morning, I want to trade. I want trade on Tuesday. As you can see, Tuesday was a very trending. There was no entry model. Okay, but on Wednesday there was a good setup. So if you have taken this trade on Monday, this is your first trade on Monday. This is your second trade on Wednesday. Maybe on Friday there is no Thursday. It's a Thursday. Thursday was around. Probability gave there was a good loss. Here is a good loss on Thursday. Let me check. Let me check if it's okay. I hope not. Let's see. This is Actually, I didn't take this setup. Say 17 a.m. So this is your 5 p.m. candle, which is not tradable. So this is 9 p.m. candle. You have to stay away from it. Then you have what? You have one a.m. candle, which is the London candle, and you have your key level, which is this imbalance that was generated. Okay, use this imbalance as your key level. And what do you mean? You can take potential to trade on the area you have marked. Yes, if you mean it to trade per week, I'm talking about those days that you truly understand. You do not have to take every single day. Some days are very difficult. For example, this area, we've been in consolidation. It was very hard to trade. Of course, I take some trade around here, maybe on the Euro USD, because it was looking the same, but it was very hard to trade, okay? So sometimes you have to run away, okay? When the chart is not clear. So this is 17. This is 90, 9 p.m. And then you have 1 a.m. London candle. So you mark it, you mark the current high of your 4 hour, which is this area. You ignore this because this is inside. Okay, this is the highest one we have. Then you are going to trade this candle, for example. You want to trade this candle. I want to trade this candle. Then you do what? You switch to 15 minute. I'm trying to do the Jericho's question and not sure understanding what it tries to mean. So here, as you can see, there is a good loss. This is what we call a good loss, right? There was a patch. This candle traded higher, as you can see, and it gave what? It gave entry model. It gave after the liquidity was taken, everything was clear, right? The high was taken. It gave a good entry model around here. So this entry model, if you enter, you will enter when this candle is testing, okay? As you can see, around here, and you will be in profit around here. As you can see, you are in profit. Market trade once it is here, it made a reversal and it takes you out, as you can see. So this is a loss, and you have to accept, and you have no control about that. Okay, you have no control about that. Okay, then after taking you out, another OB was generated, which gave entry model, but there was no way you can there's no way to trade this area because the loss was taken here and you have to run away. Yeah, that's it. You have to do what? You have to run away. So someone asked me about how to define key levels. There's something I will show you. Probably we can have a session again, maybe tomorrow, because it looks like market maker template model will not be easy to talk about because time is running. So as I think I ever released a YouTube video about about a Wyckoff accumulation distribution. Basically, when the market is moving, for example, market is moving. Uh, Assume this is what? This is distribution. Then we have what? We have accumulation, redistribution. We have another distribution, for example, and then we have another accumulation. So these areas are very strong because this it's where the institutions they have put their money around here. Their money is here. If you need to mark POIs, these are the main zones you have to understand these ones. So if remember they have put your money here, they have put their money here. If they try to go higher, they have used their money to sell around here. They have to come back to close that money. So a pullback into this area is likely to form. Okay. So they are using the same zone, for example, here to add more money to create this retro move. After that, they go higher. They are closing this area. When price here, you know there is orders that were not closed. These orders were not closed. So they may decide to come back to close them. So that's how they move the market. So what you do inside this area, it is what we call uh, Wyckoff inside the Wyckoff, or let's say orders inside the other orders, for example. We have something like this, then the market is going down, then you're going to have a reaccumulation. This mean redistribution. This distribution, for example, looks like this. Then they go down, okay? So if you check inside here, you're going to see something like this. You're going to see another, because this move alone is a bullish move. So they will be adding more buys to achieve that area. Buys will be identified by a retracement you see here, small retracement to go higher. This can be a strong POIs. Okay, you have a bigger one here, but you have also a smaller one. Let me check if there's a good example in the Euro USD. Let me see if I can find a good example for you guys. Sometimes you need to understand that concept. So if you were to take, for example, you can see that you have this, for example, you have this other block you have here. Or let's say you have this big move you have around here. You can see if you check how they were trying to move the market, they were what? They were some kind of structure. They went down, retracement, they went down, retracement. These are redistribution. They are adding more sales to go down. Okay. So if they break this area, there are ways they try to come back into this zone to close the orders they have used around here. Okay. This candle, this bullish candle, this pullback you see. If you go to daily, you will see that. Okay. This pullback you see. I'm showing you this area. Okay. I'm showing you this area. This area you see. Okay. They use this area to go down. This is a clear distribution. Okay. They're creating a pullback to go down. They're creating a pullback to go down. These are the orders they are using. So once they break this area, they have to come back to close those orders. So if you check inside that zone, you will see another pullback. If you look at here, you have bullish candle, bearish candle, another bullish candle. So this is a reaccumulation inside the distribution. Okay. These are strong areas. They need to come back to those areas. They can close this area at the same time, adding more, if you understand. So if you mark this area, mark the whole area, mark the whole area. maybe I will take enough time to talk about this. So the move start from this candle. They trade higher, lower, and higher. Okay. So once they break this area, they have to find ways to come back to close these orders they have put here. Okay. So they have to come back to that zone, this one, to find ways to close those orders, as you can see. So we will take time. So if you go inside this move, if you stay this move, this was a reaccumulation to go higher. They trade higher, they create a certain reaccumulation, and then they go higher. Okay. Okay. So they have to come back to this area to close these orders they have put around here to move down. Okay. So if you want to refine the zone, and you look at here in this small move, you see this reaccumulation. It has also a small redistribution. If you can see, we have from this top, we have distribution, we have a redistribution here. In order to achieve this move to downside, they trade lower, and this was not enough. They decided to create another small pullback so they can complete the move again. So there is another money they are putting here to be able to achieve this level. Okay. So if you want to refine again, you come back here. This is zone. This is zone. Okay. If you want to refine, you come back to this zone, as you can see. Okay. Can even keep going lower to see if there's another hidden area that can possibly get tested. Okay. And for our inside, your chosen area. Your chosen area. So they drove price higher to go down. Okay. They drove price higher to go down. So if you go to 30 minutes, let's see if you can find something. Over refinement is not good, but it gives you an idea. I will take a time for this because I don't have enough time to show you how you can refine these zones that you know the area market is likely to react to. Okay. It drove price higher to go down. Okay. You have beautiful zones like beautiful zones. Sometimes I don't know if we can get raw time frame here, but every candles matters. Like those ones. It's very far here, I don't know. With these small ones, maybe if you go to 15 minutes, you can find what? Can you find a reaccumulation that was used when they were driving price higher around here. Okay. They can probably touch them for in the future for a possible move to the outside, as you can see, to the peep. Okay. As you can see to the peep. Okay. So I will show you how to mark those areas if you